Hello guys, today I'm really happy to bring you Alibaba stock analysis. As you know, Alibaba is one of my favorite stocks out there and they just released this week their last quarterly earnings. I'm not gonna talk about that, but they just beat expectation. It was a good quarter in my opinion, and the stock price in the beginning it just climbed to $100 and now they are down. Um, since the beginning of the year, Alibaba stock price increased from 90 to around $120, which was a really fast increase. And now we are back again to the $90 range. So this might be another opportunity to enter the stock. So for a long-term investors like us, that's good news. So let's talk about the stock. So Alibaba. Alibaba is the king of e-commerce in China. They have a market cap of $235 billion. Their PE is 40, but don't believe it because their earnings on the last years are really depleted. It's not a normal earnings year for Alibaba. So they are expecting the 2023 earnings to be far better. They are expecting that their forward P will be around 10, which is really low for a company with the quality of Alibaba. Their revenue growth has been really awesome. They are growing in the last 5 years. Their revenue is growing around 40% a year. Their gross margins are really good as well. They're around 36%, which is really good for an e-commerce. Their cash is really high. They have around $70 billion in cash and the short-term investments, and their long-term debt is around $21 billion. So they have net cash of almost $50 billion, which is really high. For example, if you compare to their market cap, it's around almost 20%. They have low debt, which is really good. They have a high moat. They are one of the best companies on China, which is a difficult country to analyze. But I'm getting really bullish on China. They are getting better. Their GDP is expecting to grow around 5%, which is really high if you compare to the United States, and their middle class is increasing a lot, which benefit the consumer. And one of the companies that can benefit from that is Alibaba. So I'm getting bullish on that. So if you check our checklist, they have a wide moat. They are growing a lot. Their revenue growth is high. They have a low return on invested capital, but I'm not preoccupied on that because their last years has been really bad. They had a lot of problems to deal with, but in the future I expect their return on invested capital to be a lot higher. They have low debt. They are being free cash flow positive, and they are now they are returning capital to the shareholders. They don't do dividends, but they are buying back shares now, which is good for the shareholders because we want buybacks to be done, and we expect that to be done when the price of the company is undervalued. So let's see if that's true or not. So let's talk about earnings. So let's do our discounted cash flow analysis for the next 10 years. Their margins have been changing a lot. Their margin have been around 20%, 40%. I don't know what to expect. In the last quarterly earnings, the e-commerce segment had 21% net margins, which is really good for an e-commerce. So I'm expecting better than that for the whole company in the next year, because they have a lot of side bets. They have Alibaba Cloud, they have their Kenyo, which is their segment of e-commerce in Europe, and transportation. They have a lot of good investments there that are not profitable yet, but I believe in the next few years they will turn profitable and help the earnings of the company. So for my base case, I will expect 20% margins. Um, I'm gonna be conservative on my assumptions. I will expect 15% in the next 5 years and 10% after that. I'm choosing a low P for a quality stock like Alibaba, but it's a Chinese company. They will be always undervalued, I think. I know. And my discount rate, as I used to do, 12.5%. In my bull case, I will expect a little bit more of growth, margins around 23%, and I will use a P of 17. For my bear case, that's the minimum, I think, for Alibaba. I think they will grow in the minimum 12%, 80% for the terminal rate, P of 13, and their net margins around 17%. So if we calculate all that, I will come with intrinsic value for Alibaba of around $150 per share. I think I'm being conservative. I already put some margin of safety on my discount rate, so that's not the intrinsic value. If we put 10% discount rate in my base bull and bear case, I believe the intrinsic value of Alibaba will be around $200, which is where the other investors think Alibaba true value is. But I'm trying to be a little bit conservative, so I believe my value for Alibaba will be around $150, which turns it to be a good investment in my opinion. I think if you invest now on Alibaba in a price around $90, our rate will be around 20% per year for the last 10 years if our assumption turns to be true. That turns to be one of the best opportunities in the market, in my opinion, and throughout all the companies I follow, it's probably one of the best opportunities I can find. It's a quality business in a country which is expected to grow a lot, and so the company will grow a lot as well. They have a wide moat. It's a good company in general. They are returning capital to the shareholders now via buybacks, and I'm getting more bullish on the company, on the country. I believe in China, but full disclosure, I do own Alibaba stock, and what I'm talking here, it's not investment advice, it's just my opinion. So do your due diligence and buy it if you like it, but that's my opinion. You have my price for Alibaba. I know you like to know the prices if a company is undervalued, as I do. I do like to see it. So I hope you enjoyed the video. It's my Alibaba stock analysis, and don't forget to subscribe. Thank you. Bye.